really causes the crypto market cycle? What is the real catalyst of all the bull runs that we've experienced? It's not what most people think it is. It's not the halving, and it's not time. In fact, there really is no such thing as the 4-year cycle. There's just the cycle, and it takes as long as it wants to take. So, what really causes it? That's what I'm going to share with you today, introducing a new concept that I like to call Cairo's Law. And you can also kind of think of this as today is our little live stream planning and debate prep session for my live stream coming up on Monday with T-Bird, where we discuss this concept and see, is it really about time or is it about something else? Shut the FUD up starts right now. Hello, everybody. It looks like Tam Tam's already here, my number one cheerleader. Good to see you. So, yep, got something to share with y'all today here about what I like to call Cairo's Law. I haven't heard anybody else discuss it, so that's why I'm claiming it. Although I will say, like, mainstream crypto is actually starting to catch up to me here. The mainstream crypto media is starting to say it's kind of the same things. I heard Raoul Pal actually say something about all of this here. He is saying that, yeah, there's no longer a 4-year cycle. That it's not time that tells crypto what to do. Which, hey, it's great that people are catching on to that now. So we'll get into like what I think is causing it. I spoke a little bit about this yesterday during Crypto Empress's spaces that she did specifically to Hex and Pulse Chain, which I'm very glad that we had that. Very glad to have seen her putting on that spaces. Really got to thank Fast Abdul for orchestrating the whole thing. And it was great that like somebody from, I guess, kind of like the mainstream of crypto media giving us a chance to voice our community and everything. But that went very well so far. I think 3,000 people have listened to it. If you haven't listened to it, go check it out. It's on my X account. Let's take a look at what's going on in the markets today and the things that we always want to look at whenever I do one of these live streams. We'll begin with how's the market today. I'm going to refresh it here and look at this. Ethereum, after a pretty nasty dip down below 4,000, is now above 4,000. So it's not in correction territory anymore. It's above or less than 20% from its all-time high. And Bitcoin has regained a little bit. So Bitcoin is actually still positive on the month, which is good because every time, I'm not saying that like this is anything carved in stone or this guarantees a good Q4. But every time that we've had a green September, that's always led to a green October, November, and December. Now, I don't think that anything about that is carved in stone. So just because we finish this month green, that doesn't guarantee we're going to have green months up ahead. But it's a lot better to have a green September than a red September. So everything is looking like it's making some progress to regain a little bit of all that it lost. Still, a lot of these coins are very low priced. Like down here in the Sonic ecosystem, this is very low price. I bought a little bit in the Sonic ecosystem today because, yeah, a lot of these guys here, they've taken quite a beating, and it'll require a lot more monumental green candles before they make any of that back up. Here today, but really the star is EHEX because that one seemed to have lost the least out of all the ones that suffered some losses there. Let me get that chart back up here. Yeah, it's still at 0023. Very good performance for Hex on Ethereum. Now, why is it up today? What went on today here? Well, I'll tell you exactly why it's all up today is because this little measure here is down. Yes, I know there is a guy out there who calls himself Execute and says this doesn't matter. But the thing is, he's wrong about a great many things. This is the big one that he's wrong about. He says the DXY doesn't matter. Well, please explain the perfect inverse relationship that we're seeing play out before our very eyes. And it happens so often that I pointed out on almost every single stream that I do. Please explain to me now why the DXY doesn't matter. It's been going down all year for the most part. The overall trend this year has been going down, and that's how Bitcoin got back up above 100,000 despite getting kicked in the teeth earlier in the year and falling below it. They started the year off close to 110, or actually it really was at 110. Now it's down to 98. If we get it down to the low 90s, like 91, that's where we get our bull run. It may go down further than that, though. It may go down a lot further. It's like Gareth Soloway said, once it breaks the 96 level and goes further down, it could go all the way down to the 80s and the 70s. We'll just have to wait and see about that. When it comes to the interest rates, such as the 10-year Treasury, not much has changed. Well, let me refresh it here. Did it change at all? I don't think anything has changed on it. Yeah, not changed much here. It was at 4.18. Now it's at 4.17. And that's probably where it's going to stay here for a while. Now, here's the interesting thing is like after they cut the interest rates on last Wednesday, that was when the long-term rates, such as the 10-year Treasury, started to go up. And also, strangely, the dollar index here started going up as well. And that's not supposed to happen. What a lot of people would think is, well, if you cut the interest rates, that's less interest that a dollar invested or stuffed in a savings account is going to earn. So that should weaken the dollar, right? Under certain conditions, yes, that would be the case here. But you see, here's the thing. Here's the thing is like, if we were going into a recession, or if the Fed was behind the ball and we were already in a recession, cutting the federal funds rate may have that effect where it will weaken the dollar and it will bring down the long end of the curve. But when we have a strong economy, which if GDP is to be believed, when we have a strong economy like we have right now, that does the opposite. Because what happens here is the rate gets cut, and that makes borrowing for businesses more affordable or less expensive is what we should really say. The 10-year Treasury is based off of growth and inflation expectations. And when it goes up, what they're expecting here is that there's more growth in the future of the economy because of that rate cut. So depending on your perspective, you could say that the rate cut actually did exactly what it's supposed to do. It's going to help grow the economy. Depending on your perspective, because some people are saying, well, no, this is not a growth expectation. This is an inflation expectation because inflation was already at 3% when they cut the rates. Now it's going to go higher, and we are going to go into a recession. So really, at this point, it could go either way, just like that one stream I did here where we're going into recession and what looks like we're not. And it was pretty straight down the line, even either way, 50-50. I do think that the way that it came out, though, is it said, well, we're not going into recession based on all the factors there. But we are seeing a lot of signs that we could be going into a recession. So we can't say for sure just yet. Can't really say for sure. What I think is also a possibility, though, is like maybe we were in one all this time, and now we're coming out of it. Because typically when the NBE says we were in a recession, they officially call it one. By the time they do that, we're already out of it. Because it's always backward. It's always a backward measurement. They'll only measure it after it's happened. That's the only way they can measure it. If you want a copy of this book here for free, you can get a copy of this book here for free. It's called Your Parents Were Wrong, Debunking and Replacing Outdated Advice. This was a book that I wrote a couple years ago, and this will help you live a better life. I promise you, it will help you live a better life. You could just buy it on Amazon if you want to. It's just $2.99, and it's a pretty quick read, but if you want it for free, all you have to do is come on over here to my Substack. That's reinventideal.substack.com. I repeat, that is reinventideal.substack.com, and click right here where it says free gift. And all you got to do is subscribe to my Substack. It costs you absolutely nothing. My Substack is free. Doesn't cost you anything at all to join my Substack. And when you do, I'm going to send you an email that will give you this book for free. I'll give you the download link for it. If you want to become a paid member to my Substack, kind of like I'm living out of a tip jar here sort of thing. Like I'm sitting on the sidewalk with my guitar playing some music, and if you like the songs I'm playing and you just want to make like a donation, you can become a paid member to my Substack. And if you do, I will send you a copy of this book for free as well. It's called Bitcoin Begins, Bitcoin Explained Using Batman. And the reason I wrote this is so that when your friends start asking you, hey, that whole crypto thing that you do, I notice it's making a lot of money, and I want to get in on the act here, but I just really don't understand it. This is going to help you be able to explain to your friends so that they get it and it's understandable. That's the idea behind that book, because everybody gets analogies around Batman. Everybody knows Batman. All right. So I want to submit to you all an observation that I made, or a theory that I've come across. And I'm thinking now, well, it's pretty solid here, so we can go ahead and call it a law. I call it Cairo's law. And what I base it off of is this here, is the global M2 growth is what causes the crypto market cycle, and it's what causes the bull run that we experience. And this is what I'm going to pose to T-Bird when I talk to him on Monday. I say, I don't think that there's any sort of 4-year cycle where the cycle's not contained to 4 years or any time frame at all. I think that the cycle takes as long as it needs to. It just so happened to have lasted 4 years the previous 3 or 4 times that we had one. Well, I guess you could say 3. Previous 3 cycles that we had, with a 2013 top, a 2017 top, and a 21 top. They took that long because that's just how long the global M2 growth lasted for last time. And it's not just the global M2 growth. There's actually other things that correlate with it. I mean, I think that what's going to happen is after this cycle, we're going to look back on this and think, my God, how did we not get time? And hopefully, though, when they do look back, they find my streams and they find my book that detailed all of this here. I'd be like, oh, yeah, you know what, that Cairo guy, we should have been listening to him the whole time. Because, man, he would have really helped us make a lot of money. Hopefully that happens. But dare to dream. You never know. People just, they're going to find whatever they find and assign the value to whatever they want to assign the value to. But here's the deal. It's like there's just always been a strong positive correlation between monetary expansion, the money supply growth, system-wide global liquidity increases, and rising cryptocurrency prices. Strong correlation between the two of them, and it's well documented in a bunch of financial analysis where expansions in global liquidity, because typically that's driven by central bank policies like quantitative easing, which we call the money printer. They tend to inflate risk assets, including crypto, by increasing the available capital for investment. It also weakens the fiat currencies, and because your fiat currency is getting weaker, you want to do something about that. You want to preserve your wealth. So what do? You look for an investment or an asset that not only keeps pace with inflation, but has a history of outpacing inflation. That doesn't mean that the correlation is perfect. See, it can weaken during certain times, Like if there's crypto specific events like an exchange failure or a regulatory shock, or if there's some extreme part of the cycle, and there is lag between the two of them, and that's what I'm going to go over today here is just kind of outline this whole cycle out for you. But let's see. Let's start with the first chart for today here. Where's the chart that I'm going to use? I'm going to use a couple charts here. Let's see. Okay, here we go. Well, this one's just in the United States. That's just USM2, which is fine. I mean, it proves the point here and everything. But let's take a look at. Here we go. Here's the one I want. Global M2. And where we want to look at is we just want to look at it for the time that Bitcoin or crypto in general has been around. And that's here. And let's see, that red line, that just shows you the year-over-year growth. The green line we can ignore because that's just the exchange rate. But the gray stuff back here in the back, what that shows you is the money supply as reported by the four major banks throughout the world, like the BOJ, the ECB, Federal Reserve, Bank of China. And when we look at that, and also look at the red line itself, what we can see here is that a lot of these spikes in the red line also tend to correspond really whole spike in Bitcoin specifically. And even if we looked at kind of like this outlier one here in 2011, so June 2011, it like really kicked up. What did Bitcoin do during that year? During during 2011 in the summertime. Well, looky here. Look at this. It's almost right on the dot. June 9th, 2011, Bitcoin hits its first super all-time high. I think this was when Richard just said he got into it. He said he bought Bitcoin at 30 and then it went down to $2. He bought it at $30 and went down to $2 on him. Look at that. The first big pop that it ever had was in 2011. And that corresponds to the pop here, the year-over-year growth in the world's money supply. So, score 1 for me on that. Now, it goes down. Notice this red line goes down. And so does it go negative? No, it doesn't go negative, but it gets pretty close to zero. It's at 3.75. That's a dramatic drop going from 3.75% going to that when you had year-over-year growth at 16%. So go from 16% to 3%, that's a major drop. I mean, my God, if treasuries did that, like it would cause a huge panic. So, of course, Bitcoin takes a dump just after, that you can see on the chart. It retains some of its power, retains some of its price, but first it takes a really big dump, and then it takes a slow grind down. And Richard experienced his first bear market as he went down to $2.39 in 2011. And nobody knew what was going on back then. I don't think anybody knew about Bitcoin and M2 growth because we didn't really know that much about Bitcoin. It was totally new. Now, let's look at the next bullish action that Bitcoin experienced, and that was in very late 2013. This was probably like what's acknowledged as the first bull cycle that it went through, where it went all the way up to $1,100. What did Global M2 do? There it had another pop up to the upside. See, December 2013. Now the year-over-year growth is at 5.21%. And you can just kind of see here that the money supply is higher here than it was earlier. It was at 50 trillion back then, world money supply, versus 45 trillion just 2 years earlier. And bear in mind here, we're going from 45 to 50. That is a much greater move in terms of percent than going from like 100 trillion to 105 trillion. So while it was only 5 trillion, and that seems small today in global M2, that was a big jump back then. But then come 2014, what happens here is we start, the year-over-year growth starts to go down and even go negative, meaning the global money supply is contracting. It was at negative 1.2 in March of 2015. What was Bitcoin doing in March of 2015? It was grinding all the way down here. That's right. And this was a bear market year. Man, I guess you could say 2014 was a bear market year just because that was where it went down the most. But it still had some pops. The year-over-year growth in M2 was kind of popping off still. Then, once it got into 2015, it went down. And it stayed down for quite a while here. It hit the low of, 219 or... Yeah, 219, I think, was the low of that cycle. Now, let's move on to the cycle that everybody is or probably where a lot of people first heard about Bitcoin. The 2017 cycle that ended on December 19th, 2017, or we don't really say that it ended. It didn't end there, but that was the Bitcoin top, was December 17th, 2017, or December 19th, 2017. What was M2 doing? Looky here. The year-over-year growth popped, and it popped pretty hard. You see, March 2017, it bottomed at 3.3%, and then it topped the first top was December of 2017 at 12%, and then it hit another top in February 2018 at 14%. And I remember, that was where alt season was going on. It was happening in January of 2018. And then, when the year-over-year growth falls off a cliff, it doesn't go negative. It stayed positive, but it went down to a decimal. That was where you were experiencing the bear market of 2018. It was all throughout that time. I think it went up into 2019 as well. All right. Now, in the U.S. in particular, there was actually M2 growth in the U.S. money supply, which I think I can find here, because balance sheet expansion was happening. I'll show you that in the next here. But this is the U.S. chart. You can see it's not very dramatic like it is over here in 2020, where it went from being, a 6% growth to 22% growth. But you can see there was a steady climb throughout the year of 2019. Went from, what was it here? It went from 4% to 7%. And also the Federal Reserve balance sheet, we can see it right here. I want to zoom in a little bit more. On the back half of 2019, from September all the way to the new year turning around, quantitative easing was going on, but it was just a tiny bit, just a little bit of quantitative easing. They went from 3.7 trillion in assets to 4.1 trillion in assets on the Federal Reserve balance sheet. What was Bitcoin doing? 2019, it was actually going up. It went from the low of 3,400 to hitting its high for that year of 12,500. Does this not show you that it is a direct relationship where they follow each other? I mean, I don't know how anybody questions it after seeing that. You had the pandemic that caused the crash here and brought it down further. But then, what was going on in the last cycle? Look at that spike up again here in global M2, which, let me highlight it here. It goes from a very measly 0.41% growth all the way up to a 21% growth by 2021. And it was still growing all the way up into here. It's just the year-over-year growth was lesser each time. It kept going, though, and it kept growing all the way up until February 2022. Let's see. Well, actually, March, because March was a tad higher, but the growth had slowed down tremendously, and then it started contracting. Alt season last cycle lasted till about March 2022. I know because I was still making money in it up until March. And that's all because the money supply of the world kept growing. Then, as it started contracting, the bear market got nastier. And the bottom of the growth here, where it was negative 5% contraction in the money supply, bottoming out in October 2022. So not quite the Bitcoin bottom, but pretty close to the Bitcoin bottom that occurred after FTX in November the next month. And remember, there is some lag here between Bitcoin and the M2 money supply. There is going to be some lag between that. Now, what about so far this year? This year it's been pretty wild here, as you can see. Like, it's been going up, it's been going down. This was year 2023. It was pretty wild there. It went up for a little bit, and then it went back down. So kind of oscillating between 87 and 86 trillion. Then, come September, it started going back up, just like how we started going back up in September last year. Then it went down, the year-over-year growth, but it only went down from like a 7.5 to a 2.15. So it looked like we were getting our teeth kicked in. It wasn't getting our teeth kicked in that bad. And then it started going back up. And we started going back up as well. Now, how closely does Bitcoin follow this? Got a chart that shows us that here. Let's see, is it this one? Yeah, this one here. So take a look here at all this. And these are let's look at the last two cycles. I could look at the older ones right here, but really, the last two cycles are the ones that our memory serves us best at. So all the way up to the 2017 top, you see that the blue is pushing the yellow up on this chart. That's not an accident, because the yellow or the gold, it falls when the blue goes down. Then, as the blue starts to go back up, well, while the gold line lags, it eventually does catch up. It does catch up. Now, here's the real interesting thing to me. Take a look at this here, where the money supply growth outpaced the price of Bitcoin. As at M2 growth went up 17%, money supply was much higher. While that was going up, the price of Bitcoin was going down. We call that a divergence. And like, well, wait, that's not supposed to happen now, is it? That's actually part of the pattern, and I'll get into why that is later, but that's part of the pattern where first there's a divergence. We're experiencing a divergence right now because M2 is going up while Bitcoin has gone down. This divergence, it lasts for a certain period of time, and then after that period of time is over, that's when Bitcoin and all of crypto shoot right up, like because it's catching up to the M2. So the first time that we saw it here in the last cycle was in September of 2020. Other than that, we can take a look at this here. Like these peaks, they all seem to coincide with each other. In fact, the only thing that like really didn't seem to like have any coincidence was the November top for Bitcoin that kind of came unexpectedly and out of nowhere. You gotta remember that's like the top that Richard didn't call. He refers to it actually as the Judas candle because they called the top. A lot of people were calling the top back here in May of 21. A lot of people were calling the top there. But then you got that Judas candle that came in November. And like the reason I think that that wasn't called as the top by people that accurately call the top, Richard Hart among them, is because the money supply growth was down. All right. And by the way, this is not tracking these blue lines that you see there. They're not tracking the money supply itself. They're tracking the money supply growth. All right. Now, the new cycle starts, and it shows money supply contraction. And this was a time when crypto was really suffering. That was crypto winter. And Peter Schiff said it was extinction. I couldn't find that tweet. I think he deleted it. He had a tweet back in 2022 where he said, "Oh, this isn't crypto winter. It's crypto extinction." And like I wanted to dig that tweet up and rub it in his face. But I couldn't find it. I think he deleted it. There. But thankfully, Yahoo Finance did an article on it. So I posted that under his latest tweet where he said, yeah, Bitcoin's going to die this cycle. I'm like, hey, Peter, you remember when you said this dumb thing and how it didn't come true? Actually, I like Peter Schiff, though. I like Peter, but this is something that he's totally wrong about. I see you guys got some questions in there. Don't worry, I'll get to them. Toblerus, I see your question. Fugly Googly, you got a question there. Johnny. Yeah, Johnny. Hey, Johnny. Chaos, how you doing there? Yeah, I talked about Raoul Pal earlier today. Raoul Pal, he was talking about like how the cycle is broken. We're gonna talk a little bit about that. And by the way, Johnny, anytime you want to come on here and co-host the stream with me, just let me know. I'll send you a link. Because I just figured out how to do that today. I just figured it out. And everybody, I will get to your questions. I will definitely get to your questions before the stream is over. Don't you worry. So, back to what I was talking about here with Cairo's law. And what this is all about here is that you got to pay attention to not just the money supply, the global M2, but you also got to pay attention to the year-over-year growth on it. Because whichever of the two out of those two things that's the strongest, that's probably, or the more dominant thing, that is going to be the thing that influences the crypto market itself. I'm working on precise numbers that I can conjure up here for you. Working on like the most precise numbers that I can to tell you, well, for every dollar of M2 growth that we experience, Bitcoin does this, or it does that, or crypto itself does that. So I'll probably just leave it on this page here for right now, because there's some art charts I'm going to show you that also kind of show you the exact same thing, not just with M2, but with other metrics that we can track in the overall economy. So this is a matter of not time. Time is not telling crypto what to do. T-Bird is going to make the case that it does on Monday when we talk to him. If anybody can make the case, it's T-Bird, so we'll hear him out on it. But what I'm seeing here from these charts is that it's not time telling crypto what to do. It is the money supply and the overall economy of the entire world that tells crypto what to do. All right? And like, here's how I kind of come to these conclusions here. I mean, we start with global M2 money supply growth because That's the most commonly cited metric for system-wide liquidity. That aggregates broad money like cash in people's pockets, deposits at the bank, money in money markets, things that we can easily get our hands on if we need to because it's very liquid. And that does it across the major economies, which are the US, the EU, China, and Japan. And historical data, as we see here, shows that Bitcoin's price closely tracks year over year M2 growth. And the expansions correlate to bull markets and the contractions correlate to bear phases. And reasons for that here, we'll think about quantitative strength. If you know about Pearson's correlation coefficients, that's where they use what's called R values, or the letter R, an R value. That measures a linear relationship on a scale of -1 to 1. When we use that correlation coefficient, there's a range from 0.6 to 0.94, or you could say 94%. What causes it to be a range, what causes there to be variance, is it depends on the time frame that you're looking at and the exact liquidity measure that you're looking at. But just having an R value of 94%, I mean, that indicates that's case closed for me there. I mean, I'm still looking into it here, but just right off the bat, looking at that, a 94% correlation is almost case closed. If you want to be as anti-liberal with it as you could, or be as skeptical with it as you could, I think that if you take some of the correlations away because we could find other explanations for them, well, in that case, Bitcoin still has directional alignment with global liquidity changes 83% of the time, and that's over any 12-month period. That is a higher correlation than stocks, such as the S&P 500, because that's only 70 to 80%. And that's a higher correlation than gold and all precious metals. Those are the R-squared values that explain the variance. They typically exceed 90% whenever you run a long-term regression like that. And a regression is kind of like what we're looking at right now. This is a regression where we just lay two charts on top of each other and see how correlated they are. So liquidity actually accounts for most of Bitcoin's price variance. That's Cairo's law, because nobody else has named it yet. So I'm taking credit for it, like it's my discovery. All right. There is a lag effect, though. I mean, I don't think you probably can't see it on this chart. Let's see. Is there a chart where we can see it? Maybe it was on this. Nah, this one doesn't really show it either. There was a chart that showed specifically what Bitcoin did with the M2 growth. It was on, I think it was called Bitcoin Metrics or BitcoinFlowcharts.com. But when I tried pulling it up today, it just wasn't coming up. So don't know what happened to that. Because that would show you the lag effects and also the divergences. All right. Now, there is still a lag effect. And it's roughly anywhere between 4 and 12 weeks. So 1 to 3 months. It can lag behind from 1 to 3 months. Currently, we are lagging because you'll notice M2 growth is going up right now. Bitcoin and crypto in general is going down. I mean, that divergence there is indicating the lag. It could be corrected come next month, or it could go all the way out till December. We don't know. We got to watch it. But here's the thing, is when that lag is finally over with, when the lag is over, that's when everything shoots right up. Because what's happening is all of that new money that's been created from newly printed global M2, that money needs a place to go. They just printed off fresh new dollar bills. It's hot right off the presses. Those dollar bills need to find a place to go, and typically it's financial assets. Yeah, we could also look at US specific M1 and M2. That shows a very close correlation as well to the overall crypto market. But it also expands beyond Bitcoin. We could look at the major altcoins as well. If we did a regression chart on Ethereum or Solana, we would see a pretty similar pattern. All right. Now that doesn't mean that the M2 growth is the sole causation. There are some other factors that push Bitcoin up and have these blow off tops and everything, such as ETF inflows or just the sentiment, the retail FOMO. But net liquidity, I think, is the first snowball that causes the avalanche, or it's the first raindrop that causes the flood. And when global M2 hits record highs with its year-over-year growth accelerating, that suggests potential for risk-on asset upside. And that's where the analysts come up with their targets. All right. Now, what I said earlier is that Bitcoin aligns directionally with global liquidity changes 83% of the time. I was curious about the other 17% of the time. What happened there? Was there anything out of the ordinary to cause a severance in the correlation? Yes, and that one was a chart that I had to screenshot for us here. Where do I got that? Here it is. All right, let me bring this up here. Hang on, this part's going to take me just a sec to get it ready here. I was like, I wanted to zoom it in, but I want to zoom it in without making it look all pixelated. Okay, now I got it. So I'm bringing it up here on the screen. So check this out. There was some times right here where there was divergence, or this isn't it, sorry. There's another one here where I did it. Thought I had it. Looking through all my charts. Oh yeah, here it is. Divergences from the M2 growth. And also, like, when we talk about the lags that it experienced, a lot of it was in the form of divergence, meaning M2 growth was going up this way while Bitcoin and crypto was going down this way. Hopefully I'm making the symbol right, or I'm making the direction right. So, like, the M2 growth goes up, crypto market goes down. They diverge. Most of the time, whenever they did not follow one another, when they didn't go up together, they would be diverging. Here is some of the stuff that caused that. And a lot of it is that these were freak events, absolute freak events. The first one was Mt. Gox, and that divergence lasted 20 weeks. And a lot of people back then really thought that was going to be the end of crypto, because Mt. Gox was the only place where you could buy Bitcoin for a long time. 2019, there was a 12-week divergence, and that was because of the whole Plus token fiasco, if you remember that. And then we had an 8-week divergence during the pandemic crash. Interesting thing about that is that a macro disaster, a macroeconomic disaster like the pandemic, while that was really bad for the whole world, that one had the shortest divergence for the entire history of crypto. That one got resolved in 8 weeks, and that's because the Fed had an emergency meeting. And during that emergency meeting, they decided to turn on the money printer and chop interest rates down to zero. Now, 2022. This is where we had the most brutal bear market we've ever experienced. I think we're still in it, if I'm being honest. This was referred to as crypto winter. And a lot of people started with the collapse of Terra Luna. There we had the longest one of 24 weeks. All right. And then currently, we have spent 10 weeks in a divergence from the M2 growth. For the last 10 weeks, M2 has been going up, whereas crypto has been going down. Or it's at least not correlating that well with it. This also just kind of shows you like the intensity of the drawdowns as well. Like, the Mt. Gox one, that drew Bitcoin down 85%. Plus token, when that fiasco happened, Bitcoin got cut in half. During the pandemic, Bitcoin got cut in half. And then during Terra Luna, everything that year went down 75% at least. Here, we're only down 5% in this current divergence. It could go down more for it to fall in line with previous ones. So you guys got to brace yourself here. I've been saying this all month. We got a very difficult month in September. I think we have a difficult Q4 ahead of us, too. I could be wrong. I hope I am wrong. But just based off of this here, it has me thinking we could have a very unpleasant 3 months ahead of us. Hopefully I'm wrong. But this here just explains that when there is a separation, when there's a divergence, when there's a non-correlation between the crypto market and M2 growth, it's usually because of freak events out there. Could some freak black swan event happen still? Absolutely, there could be a freakish black swan event that nobody was expecting that could happen in the next 2-3 months. I don't know what it would be. I mean, it'd have to be something like foreclosures are ticking up, another housing crisis like that. It would have to be World War III, or it could be maybe it's going to be a matter of like the mask gets peeled off on all this AI stuff, and everybody realizes, hey, AI is not really all that great. It doesn't do all that good stuff that we thought it would be able to do. Good example of what I mean here is, you ever heard of the name Elizabeth Holmes? Or you ever heard the name Theranos, which is a name of a company, not a person? See, back around 2018, 2019, this young lady named Elizabeth Holmes, a very interesting character, by the way. She's a young blonde girl, just out of college, but she forced to speak with a deep man voice. And you could tell it was totally contrived. You could tell whenever she spoke, it was totally contrived. Because she's going, oh, yeah, I'd like to do this, and I want to create new medical technology so nobody has to say goodbye too early. Anyway, the interesting thing about it is, like, she wanted to create a new type of blood test. And it was a good idea. I really think the idea was good, because, like, I hate having to do blood tests. Whenever my doctor made me take one, I hated every single second of it, because you had to get up at like 5 a.m. to get there at 6 a.m. so that you could wait outside with a bunch of other people, and then you get admitted in at 7 a.m. and you got to wait in line now for a whole nother hour. Now it's 8 a.m. and you finally get to give the blood. So they shoot you with the needle and they draw the blood out of you. But you don't know anything about it until like 5 days later, and it's not like you can call up and ask, like, hey, how'd my blood test go? And they won't tell you. I'm like, well, it's my own blood. Can I know about my own blood? No, apparently it's like some top secret stuff that you're not allowed to know. And then a week later, you get the results. So what Elizabeth Holmes wanted to do was she wanted to create, it was either a pill or an at-home blood testing device. That's what it was. An at-home blood testing device was called the Edison. And then eventually she wanted to do a pill where you swallowed it and it, I guess like you pooped it out or something, and it had like all of your vitals and everything, and your blood tested for all sorts of diseases. And it sounded like a great idea. Now, if you checked out the board of directors for her company that she started to pull this off, it was called Theranos. When you look at the board of directors, and I saw all the names on, I'm like, hey, isn't that guy dead? Because there's some pretty old names like George Shultz, Henry Kissinger, who I think he's still alive. I think he is still alive. Didn't know about him when he talk like this. And man, I remember him like being like at least looking and sounding like 90 years old back in like 2003 when I was in high school. So you had all these old fart guys on the board, and then you had all of these Democrat politicians that were pushing Elizabeth Holmes like she was the new female version of Steve Jobs because she wore the black turtleneck just like him and everything. And you could tell that what was going on there is that, yeah, they all liked her because they all were fantasizing about her. That's what it was. They were all thinking about doing the dirty deed with her because she's a young blonde girl. Because here's the deal. Not a single one of these people, despite stashing billions of dollars into Theranos, not a single one of them asked the most critical question that just one little reporter at the Wall Street Journal asked: does the test even work? And here's the deal. Nobody asked that question. And of course the test didn't work. The technology was way too ambitious. We didn't have the physical ability to create such a thing just yet. And I think we still don't. I was like, what she wanted to do was far too advanced, like something way out of science fiction, not something that is achievable with today's technology and today's physics, or our understanding of physics today. So yeah, the test didn't even work. But none of these guys that gave her billions of dollars cared about that. They never asked, did it even work? They just gave her the money because they all wanted to bone her. And so later, it turned out it was a big, giant fraud. She got sent to jail, and all of her partners got sent to jail, and all the money just got totally pissed away. That's what happened. There's a great documentary on it. It's called The Inventor. If you like those Netflix-type documentaries, that's one of the best ones you can watch for business. So why I bring this up right here is, what if something similar to that happens with AI? Where they find out, hey, AI really isn't all that great. It's not going to be all that good for the economy. In fact, it's going to be terrible for the economy because it'll put a lot of people out of work, but it's going to be way too expensive and it's not going to be profitable. So we may as well just keep all those people and hire them back. We're probably going to have to pay them more money to get them back. And then all of the CapEx or capital expenditures that these companies are doing in the AI race, where they're trying to outspend each other so they could be like the number one company in AI, all that money would have been pissed away for nothing. What do you think happens to those companies' stocks? They're going to crumble. They're going to take a giant nosedive. Like the stock market going to look more like the crypto market in a bear season. So that could be a black swan event that comes up in the next 3 months and causes the divergence to go further. When that happens, though, now first, I'm not saying, don't twist me the wrong way here. I'm not telling you to sell anything. I'm not telling you to buy anything. What I'm saying is, if you're holding when that happens, I'm telling you to keep holding, because that's what I'm going to do. Actually, I'm not telling you to do anything. I'm telling you what I'm going to do. I'm going to keep holding because I know when a divergence like this happens, it usually resolves itself within 3 months. That's the longest it's ever lasted, is 3 months. Could it last longer? Maybe. But on average, it goes for 3 months. All right. That's what happens the other 17% of the time where crypto was decoupled from M2 growth. And it's usually a very specific, freakish black swan event that caused it. All right. Now, you're probably wanting to have somebody draw the lines or the pathways or the line of dominoes between global M2 increasing and the crypto asset prices rising, the crypto market cap rising. What is the underlying cause that makes the two of them correlate? How does M2 going up later cause crypto to go up? I'm going to show you exactly that next. But first, a little word from our sponsors. Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomic. Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomics. In decrypting crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave before it leaves you behind. Decrypting Crypto by Cairo. Available now on Amazon and Audible. All right. Hopefully that played correctly. I don't know. So, Tablarus, you say that there's no sound. Still learning how to be a professional YouTuber here. Everybody let me know if there's no sound, if you can't hear me speaking, or let me know if you can hear me speaking, because, yeah, this whole YouTube thing, it works when it decides to work, and then it stops working when it decides it doesn't want to work. So you guys tell me. All right? Now, what I want to get into next here is, what is it specifically that causes, or the correlation between M2 and the growth of crypto? Like, how do those two correlate? Why do they correlate? Why does one going up cause the other one to go up? Well, it's not so much that it's causation, because there are a lot of dominoes in between that have to fall. And I want to show you each one of them here, which I do have in a PDF somewhere here. Where to put it? Had it just a second. Okay, here it is. I got it. All right. And let's see. I should zoom out maybe, so we kind of see it all at once, because there's about 10 steps altogether here in this. Let's see. Bring this up here. All right. And you guys let me know if you can see that too. It should be showing. Should be working there. But there's about 6 steps from new money being printed and added to global M2 to then that money ending up in the crypto market cap. Let's go through what those steps are. So the first step here will be the central banks expand the money supply. And they can do that through quantitative easing. They can do it through rate cuts or stimulus. All that does is that floods new money into the system. New money creation in some way is what we're looking at. All right. Fugly Googly, you're saying you can hear or you cannot hear? It says can here. Or did you mean to say can't hear? You tell me. Everybody let me know if you can hear me, if the sound is good and everything, all right? Because, again, YouTube just works whenever it wants to. Now, step 2 is fiat debasement. As you create more money, but you don't create an equal number of goods and services to absorb that money, well, now you got a new problem here. You're debasing the currency. And when you debase the currency, purchasing power goes down. And of course, people don't like that. They want to protect their purchasing power because the hour of work that you just did now has the purchasing power of 30 minutes. And you feel pretty robbed, and you should feel pretty robbed. So that creates inflation fears, and that's where investors flee to scarce assets or they flee to risk-on assets. The next step is going to be lower yields and cheaper capital. The borrowing is easier to do, and because it costs less to borrow, people will borrow more to start businesses, or they'll borrow money to go invest in the markets. Probably not a good idea, but people do it. And that creates a shift into risk-on assets because it no longer pays to be a lender. It no longer pays to buy bonds. It no longer pays to just keep your money in cash because inflation's eating away at it. What happens next then is the market develops a risk-on appetite. So the capital flows into ETFs, into stablecoins, or into stocks, into crypto, and that creates a speculative boom. Then what happens is the crypto supply or demand imbalance stays the same. You see, all these people wanting to come into crypto to preserve their wealth, that creates new demand, but it doesn't create new supply. The supply in the crypto stays the same. And when you have more demand than you have supply, the price goes up. And that's where we get step 6, which is the rising crypto prices, the bull run. That's how it kind of goes from start to finish there in all the steps. Some other things here to bring up about that, though. I mean, when we look at that whole step-by-step, let me bring it back on. I'd bring up not that chart, but this chart. So when we look at it step-by-step here and how that works out, what I want to say about that is it isn't just correlational. It's going to be driven by a bunch of interconnected economic mechanisms that create this domino effect. The underlying cause, though, is fiat debasement and liquidity overflow. Liquidity overflow just means new money that's being created needs a place to go. It has to be accounted for somewhere. Typically, it is financial assets when there's nothing in the overall economy for it to buy. And the reason it's got to be that way, the reason people have to buy financial assets is because would you let your money just sit there and do nothing the whole time? I don't think you would. Well, of course you wouldn't. Not when the currency is being debased and the purchasing power is being eaten away. You're starting to notice it and you think, oh my God, well, I got to put this money in something so it preserves the purchasing power. Now, are a lot of people consciously thinking that? No, most people are not consciously thinking that. But what is happening is money managers are investing more aggressively for that reason. All right? So when those money managers invest more aggressively on your behalf, they go into more risk on assets. And once it, maybe they won't go into crypto, they'll go into stocks, but they crowd out the stock market and that pushes people into crypto as well. All right. So that's kind of like the nature of the relationship. There are temporary breaks in it that come just from the nature of the relationship. Because you see, it's not an ironclad treaty that has been made between global M2 and crypto. What it is it's just a highly probable and highly directional relationship. The breaks occur when a crypto specific or a broad risk off uh, event occurs during like some very high volatility phases. Now, we've been through all of those before here. We ain't got to repeat them or anything. Now, how specifically does this affect crypto? That's what I want to work out next here. And this, like, if I make Cairo's law a thing, then this here I think would be like the real math and science to it that would make it a thing. Hang on, though. Let me fix the screen. All right. So, sorry about that. Didn't mean to turn off my camera. Here's what we want to do. Just go to Paint. Paint hasn't changed in like 15 years. So what I want to do here in Paint is just kind of spell out how the crypto market grows and by how much it grows for every dollar of M2 printed. What I want you to be able to take away from this is to be able to say, for every dollar added to global M2, the crypto market cap will go up by X, which probably going to be cents. That was what I said in the spaces yesterday. If you were there, if you were there at the Crypto Empress's spaces, I gave a specific number. I want to show you how I got to that specific number. And here's how it is. Here is like, what we got to do here is take the elasticity coefficient, which we can call a beta. Beta just tracks like volatility in any sort of relationship or variance, you could say. And we use that to find a change in crypto market cap for a 1% change in global M2. So what we'll do here is we could start by taking like the entire crypto market cap currently. And then let's see here. I'll put this line in here to show that like I'm going to divide it. What am I going to divide it by? I'm going to divide it by the current global M2 total. We can start there. Now, that's not totally perfect, but I think it's a good place to start. If you take like the crypto market cap as it stands right now and divide it by the global M2, then we can kind of see, well, how much of that market cap is there from the current global M2. That's like where I'm thinking on this here. That by itself, though, is not going to be the total answer. That's just a part of the answer right now. So what I'll do here is I'll draw parentheses. Oops. All right. Okay, so there's one. And then here's going to be the other. I was like, whenever we want to isolate something in a math equation, we draw parentheses. As I got that in parentheses, what I need to add to this here is a regression beta, which we'll just call beta. And that's what we're going to multiply it by. All right, so if you're seeing me doing this live on the screen and I make a typo, please don't screenshot it and make fun of me here, because you see it's Microsoft Paint and I can't fix the typos. Now, why do I need a beta? What do I need that for here? What's the point of it all? Well, there's a couple of things here. Is that the relationship is not perfect, and there is a lag, and there is a 17% of the time where there's not a correlation in M2 growth and the increase in the crypto market. And also, a lot of the studies I could find, they only focus on Bitcoin itself. They don't focus on the rest of the crypto market. But there was a 2025 cointegration analysis on global M2 and the Bitcoin price. And what they found was a good beta, or price elasticity, variance elasticity, was 2.65. And what that meant was every 1% increase in global M2 gave a 2.65% increase in the Bitcoin price. And that had statistically high significance of 95%. All right. So I'm going to use that as my beta. I'm going to use 2.65. All right. Let's see. A total crypto market cap right now is 3.87 trillion, I think. Right. Let me just look it up real quick. Well, 3.78. All right. 3.78. And then the total global M2 currently, what do I got for that here? That's just looking that up here. 96 trillion. Yeah, you might have seen other numbers that are in the hundreds of trillions, but I'm just paying attention to what the four major central banks report, because that's all that they have track of, and that's like the most reliable number that I can find. All right. So I take all these numbers here. I'm going to divide 3.78 by 96 and then multiply it by 2.65. That should give me my answer. And here's what it gives me. What it tells me here is that for every dollar of global M2 that is created, we get 11 cents added to the total crypto market cap. Now, the way that global M2 is growing right now, what we can assume for its continuous growth for the rest of this year, or for the next 12 months, next 12 months here, the year-over-year growth in global M2 right now is 8%, which is actually pretty flat for M2 growth. It's usually a lot higher. So 8% growth in global M2 is 7.7 trillion. If I was going to calculate how much of that 7.7 trillion ends up in the crypto market cap, I'm just going to multiply that by 0.11. That would add a total of 847 billion to the crypto market cap, which doesn't seem like a lot, but remember, these are the most conservative estimates I can use. When the money printer gets turned back on, I've said this in previous streams, I think they're going to need to print at least $15 trillion. Might have to print more. So that's what they printed last time, though. So 15 trillion times 0.11, that would be $1.65 trillion being added to the crypto market cap all on its own. Now, that 1.65 trillion that's going to get added in, that is not going to get distributed evenly across all 20 million coins out there. In fact, most of the coins are going to get none of it. It is very top heavy in this market, meaning, the coins at the top, in the top 100, 200, 300, they're the ones that get all of the investment. And that's just a matter of people only pay attention to what's on the first page of CoinMarketCap. Nobody looks at the other pages. But also, the coins that have the lowest liquidity are going to get the majority of the gains and take up the majority of the new market cap. The reason why that's going to happen is because those coins with the lowest liquidity are capable of making exponential gains, not linear gains. It's not like if I put $1 into crypto, that doesn't increase the asset price by $1. It doesn't increase its market cap by $1, it can make skips ahead because of the low liquidity. What assets have the lowest liquidity right now? You guessed it, the Richard Hart assets. So that is how I see it playing out. This is Cairo's law. For every dollar of global M2 that is created, that will add 11 cents to the overall crypto market cap. And you can kind of see it in these charts. Was there one that I skipped here and wanted to show you? Okay, yeah, here's one that saw earlier on great website, Bitcoin flowcharts, or it was called Counterflow. But for some reason it's down. If you zoom in on this here, it will show you where the divergences are, so that way you can see when M2 growth went up, but then Bitcoin went down, and then how soon it corrected and Bitcoin caught up to the M2 growth. And you can see when it catches up, you can't see it here because you have to zoom in to see it. And this isn't the live chart, so it's not going to work. But when it does happen, when you do see it, there I think it will show you, and you'll be able to tell, okay, yeah, usually whenever there's a divergence, it doesn't last for more than 3 months. So this was on Counterflow is where you can find this. Hopefully they get it back up because that was a really cool tool that I liked using. Yeah. This was something Rao Powell had on his stream here, is what's going to cause them to have to print money coming up in the next year or so. What's going to cause them to turn on the money printer is what I said last time. It's the debt cycle. Right now, 1/3 of all of the debt in the United States, 1/3 of all the debt in the United States is short term. It's in T-bills. It's 1 year or less. The next third is in T-notes, treasury notes that mature between 1 and 5 years. This is partially why we think the crypto market cycle is not extended, but we want to say it's delayed. The bull market, it's not extended. It's not an extended bull run. It's a delayed bull run. And by the way, everybody that asked a question earlier, I just lost the chats here. So if you want me to read your question, I'm sorry to ask you to do this. You're going to have to type it in again. I remember somebody was asking me about my $7 EHEX prediction. So if you could throw that question back in there, I'll answer it. But I lost the questions. I'm sorry. I had to refresh the stream. So because 1/3 of the debt matures in 5 years or less, as opposed to it being 4 years or less, which it was in previous cycles, which is what made previous cycles happen every 4 years, now we got 2/3 of the debt maturing in 5 years or less. When you have the majority of the public debt that is trading on the markets maturing in 5 years or less, and the whole cycle gets completely cycled through, the entire amount of debt that's going to be cycled through this debt cycle is going to take up to the 5 years. The 5th year is 2026 coming up. That is what's causing it to take longer. That's why the bull market is delayed. I don't think they're going to turn on the money printer until they have fully cycled through all this debt. All of this debt will be cycled through come 2026 and likely quarter 2 of 2026. And that's why I said in my last stream, I think that the bull market doesn't really start until June of 2026. I know that's a very unpopular opinion. I know you guys hate that. I know you don't like it. I'm sorry. It's the best educated guess I can make. It's the most honest guess I can make. I don't like it any better than you. I hope to God I am wrong. I hope to God that come Monday when I do the stream with T-Bird, he will show me indisputable evidence that proves me wrong and proves him right, and the bull market kicks off and ends all in this year in the next 3 months. Because if you guys know anything about me, I really want to sell and go down to Puerto Rico. I won't live in Puerto Rico forever, though. I think if I'm going to expatriate somewhere, I'll do my permanent expatriation to somewhere like Mexico, like Puerto Vallarta or La Playa del Carmen, because that's more my cup of tea. So this is why it's taking longer. Some other things I wanted to show you here about the previous cycles. If you use the formula that I was using earlier in Cairo's law, if we used it in the previous cycles, what we would see is for every dollar of M2 that was created in the 2017 cycle, well, that only increased the crypto market cap by 6 cents. Why was that, though? Why was it only 6 cents back then? I mean, shouldn't it have been more because the crypto market was smaller? No. That's kind of why it was less, is that there were less cryptos to buy. And also, it was still very early, a very nascent market where people weren't sure if this was a real thing or if this was a scam. So back then in the 2017 market, every dollar of M2 that was created, it added 6 cents to the total crypto market cap and grew it to a peak of about 600 billion. That was the top there. Then in the 2021 market, what we had was a greater share because a lot more money got printed in 2021. Not too much money got printed in 2017. I mean, yeah, global M2 was going up all throughout that year, but in the United States, they kind of kept it right where it was at, the US M2. 2021, though, the whole world blew up. I mean, they added $15 trillion to in the money printing that they did just here in the United States, I think. So for every dollar of M2 that was created in 2021, 10 cents was added to the crypto market. And you'll notice, like, this is what's really interesting here is that, you see, first it was about 1%, a little bit less than 1% of the M2 creation went into crypto in 2017. The next cycle, it doubled. A little more than 2% went into it. This cycle, again, it's going to double. About 4%, we estimate, of new M2 creation will go into crypto. That could be a function of Moore's law, where it doubles with each instance. Could be a function of Moore's law, or actually it's probably just the network effect or Metcalfe's law in place here. But I'm taking ownership of it here and calling it Cairo's law, where we say every dollar of M2 that's going to be created this time around is going to add 11 cents to the total crypto market cap for this current cycle that we're in. Yeah, a few other things I noticed here was, this was just showing you the growth of M2 and how much of that M2 can go into crypto. That was what this table was about. So suppose they only print 7.7 trillion because they don't print any money beyond the usual 8% growth. And 8% M2 growth is pretty typical for the whole world. It's not unusual. I mean, you've heard that the S&P 500 goes up about 8 to 10% a year. That's the main reason why, is because it's just absorbing the 8% increase in money creation. So suppose they just do the bare minimum 8%. That's going to add about $800 billion to the crypto's market cap. That will push us up to at least 4.7 trillion. I think it will push us up higher because it overshoots due to the low liquidity. So don't think that it's limited just to that. And remember, when they use stable coins to reclaim the euro dollars, that could push us up to 10 trillion easily. And that's right, Armando, just in time before the midterm elections. That's why they want to get this going quickly here. This is why I showed in the last live stream why Trump is really pushing, trying to get Lisa Cook out, specifically so that he can have control of the Fed with a 4-vote majority on the Board of Governors and then a 7-vote majority on the Open Market Committee. Because if he has those two majorities, he can get them to turn on the money printer. All right. Next thing to show you here is just to show like how the lag is going so far this year. You can see the blue, I think, is the M2. The blue is Bitcoin, and the black is the M2. And you see that the black is leading ahead of the M2. And there's a lag there that Bitcoin has got to catch up to before it can really do anything. It's got to catch up to that. It's got a ways to go to catch up to it. But when it finally does catch up like it did right here, it overshoots it. It's where it goes up real fast. There was another chart here. Bear with me, guys. There's another chart that showed something even more interesting. Was it here? Yeah. And then here, and I'm going to show you this and show you this. There we go. All right. So I found this chart here that also shows a similar story. That, this whole Bitcoin thing, or this whole crypto market, when it grows, when it starts going up, it is not because of where we are on the calendar. It doesn't even care about that. What causes it to go up is the greater macro economy. Because here's what this one is showing us here. This is what's called the ISM. And the ISM is an important measure on the economy. It's the Institute of... Oh, crap. Name's escaping me here. The Institute of... it's manufacturing. But let me just look it up here what the ISM stands for. Institute for Supply Management. Institute for Supply Management. That tells you where we are in the business cycle. The ISM Purchasing Managers Index, which is what is being tracked here in the gray, that tells you where we are in the business cycle. Look at this. The business cycle just bottomed. It just came off of a bottom. When we just come off of a bottom, we don't hit a crypto market top. It happens later when we hit the business cycle top. Look throughout the whole chart. Here was a bottom. Here's the top of the business cycle. Here was the top of the 2013 bull market. Here's the bottom of the business cycle. Here's the top of the business cycle. Right there is the top of the 2017 crypto bull run. And then down here is the bottom of the pandemic collapse. That was the bottom of the business cycle. I mean, really, it bottomed out in early 2019, but we had the pandemic as well. When it got going back and hit the top in the middle of 2021, that was when Bitcoin hit its first top in May. I think this is why Richard Hart called the top on the day, that specific day, and not later in November, because in May of 2021, that was when the ISM marked the top of the business cycle. And that was when we got our first Bitcoin top of that cycle. It had a little bit of a kick back up after going down a little bit. It goes down a little bit, then it goes up a little bit. And that caused the new top. And then it went down throughout all of 2022. Crypto went right down with it. Since then, we have had some volatility in the ISM. But really, it just came off the bottom not too long ago in late 2024. Late 2024, Q4, crypto started going up. A lot of people attributed it all to Donald Trump winning the election. I'm sure it had something to do with it, but this is a much more powerful force as to why we started going up in late 2024. The market cycle doing what it does. Oh, hey, RH Max, how you doing? I see you there. By the way, RH Max, whenever you want to jump on one of these streams here with me, you just say so, because I finally figured out how to do that here in Rumble Studio. I'm starting to move up in my evolution of a YouTuber. I've finally evolved past the Neolithic age, so to speak. So yes, here's what I'm trying to say here is that we just came off the bottom of the business cycle. There is no way in hell, no way in hell we experienced a Bitcoin top. There is no way at all that the market cycle is all over and the top is in, because we just came off of the bottom of the business cycle. This is all the proof you need. I got a few more just like you're listening to a Reinvent Ideal live stream. The phrase reinvent ideal isn't just clever wordplay. It's a manifesto. For decades, society handed us a dusty old blueprint for life. Work 9 to 5, climb a corporate ladder, buy a house you can't afford, marry young, pump out kids, spend 40 years in a hamster wheel, and if you're lucky, retire at 65 with a gold watch and arthritis. That's the ideal we inherited, but it's a lie. A boomer-delivered illusion that made sense in 1970. But in today's world, it's a recipe for debt, burnout, and disappointment. Reinvent Ideal is the antidote. It's about rejecting the outdated script and designing a new one. A life where freedom, autonomy, and leverage replace status chasing and financial enslavement. Where your ideal isn't dictated by suburbia and social media, but what keeps you sane, sovereign, and alive. Instead of status symbols, we pursue rare and in-demand skills that buy independence. Instead of debt-fueled materialism, we choose minimalism, shedding liabilities and obligations. Instead of working to death, we embrace crypto and investments that multiply freedom instead of shrinking it. The new ideal isn't about fitting into someone else's mold. It's about building a life that maximizes your time, choices, and sovereignty. Reinvent Ideal is about giving yourself permission to redraw the map. All right. Yeah, I see you there, Max. Thank you for saying I'm doing awesome work. But I think you did awesome work when you made this.
Sometimes you just gotta shut the FUD up.
Very appropriate for today's stream, by the way, because you've probably been hearing a whole bunch of FUD about how the market cycle is all over. This chart debunks that idea. It also debunks the idea that there is any sort of mandate out there that it must end within the next 3 months, that it must be contained within 4 years. You see, it's not a matter of time. It's a matter of what is the macroeconomy doing. It just so happened to do all of the things that it does every cycle within 4 years, the past 4 cycles. The business cycle in the past 4 cycles, or the past 3 of them, just so happened to be 4 years long. Here's another thing to pay attention to: the global liquidity index. Bitcoin goes right up with it as liquidity increases. And we're also looking at M2 in that. This right here just shows these two guys move together. Or how about this? Just global M2 itself going up. Bitcoin goes right up with it. Now, this chart's different from all the other ones because you see this one's just going by every 6 months. It just has a 6-month mark. So we take a look here. When you got growth in M2, and when it spikes up in those 6 months, and it spikes up hard, well, Bitcoin will spike up hard too. Now, when it goes down, Bitcoin will go down as well, but it doesn't really go down that hard. And it goes down hard in relation to global M2. Because you see, this only goes down a little bit. It only goes from like 110 trillion down to 105 trillion. And then Bitcoin goes whoop, big crash right there, which is fine. It can handle that. It can handle that. But then this just gets going a little bit. Bitcoin surges hard, real hard. Some better charts here of that, though. Just wanted to show you, like, generic direction. So, yeah, first thing I got to say here about all this is all that FUD that you're hearing, they really need to shut the FUD up.
Hey man, just want to let you know that sometimes you gotta shut the fuck up. And this current time is just one of those times you gotta shut the fuck up. I don't think you're a bad person, I just don't want to hear you talking anymore. You gotta shut up.
So I got two more charts to show you that prove the exact same point. Here's what they are. Let's see, the first one here is going to be... Is it this one? Am I looking at the right thing? Yeah. Oh, yeah, this one right here. It's the business cycle all over again, guys. When the business cycle bottoms, that's when Bitcoin bottoms. When the business cycle goes up, when it tops out, that's when crypto tops. What this chart shows you is why it's correlated, because the business cycle is correlated to M2 growth, which makes sense. Like, as we're doing more business, we need more money to transact that business. So the blue line here is the ISM Purchasing Managers Index. And then the sort of red-looking line here is the money supply. And I think what happens first here is, like, the money supply goes up or down first, and then the business cycle goes up and down. Because if you have more money sloshing around in the system, you can do a lot more business. If we take a look at this from, like, the overall aspect of it, you see that pattern pretty much holds. Like, first they print money, and then the business cycle goes from a low to a high and eventually topping out. Next chart to show you here is just how Bitcoin rises when global liquidity rises, which, again, is another measure of M2. As the liquidity goes up, Bitcoin goes up. All right, Bitcoin Magazine put this chart together right here, and it makes all the sense in the world to me why nobody else has ever noticed this and why Bitcoin Magazine has not been preaching this on their channel all the time. Making sure people understand this is beyond me. Matter of fact, Max Kaiser, the biggest douchebag in all of crypto, actually posted something about how he thinks the biggest rug pull in history is about to occur. And he's referring to Bitcoin, that it's going to get rug pulled coming up in Q4. I think we got a difficult Q4 ahead of us. I don't think it's going to be a rug pull, though. But yeah, he thinks that the Trump family is going to pull another stunt like they did with Trump coin, or what they did to Solana. They're going to try doing it with Bitcoin. So I don't know. I don't know what he's getting at, but what I gotta tell him is, like, our Max Kaiser's the biggest douchebag in all of crypto. He actually was cheering on Gary Gensler, who was going after every other coin that wasn't Bitcoin, because that's what those Bitcoin maxis want. Is they want everything else to be declared illegal so Bitcoin goes up, and that's why I have no use for them at all. Got nothing nice to say about Max Kaiser. All right. So let's see. Any questions that we got here? And sorry, I lost all you guys' questions from earlier, because I know some of y'all submitted them. I lost them because I had to refresh the stream. So if you got questions, like, now's the time to ask them. All right. There was some questions I wanted to look at from the spaces that we were on yesterday, which I think now would probably be a good time to look at those. Some questions that some people submitted that we didn't get to do on the spaces because we just didn't have enough time. We were already going for like how many? We were going for like 2 hours or so, getting close to 2 hours. So what I wanted to do here is look at some of those questions and answer them for y'all. Let me find those spaces here that we did. All right. I want to play it though. Where were the comments and everything? Hold on, sorry guys. I'll find this thing or else. I think I got to go to Crypto Empress's profile to pull that up here. I answered just one of them yesterday, but know that there's a lot. Yeah, about 300 questions that were asked, or 300 comments. Not all of them are questions. All right. Just looking for one that it isn't going to take like 30 minutes to answer here. Okay, yeah, here we go. Pull up some of these here. Should do a stream where I just go through all of them right here. So the first one that asks here says, what are the risks of Hex being perceived as overly centralized around its founder, and how does the community counter this? I think somebody already answered this here and said, name me a chain that is more decentralized than us. Well, I mean, I could go through CoinMarketCap and just pull up random chain after chain and show you, like, hey, in most of these coins, the ownership is pretty highly centralized. I mean, that's true of just about every coin out there. Now, what makes ours less risky is that we can show you for 5 whole years our founder, or the top wallet, the origin address, has never sold. The largest holder of our bags has never sold. So that's why we can we could have it as a bragging point that we're more secure than most of these are chains. All right. Is there another question here? Can Pulse Chain's lower fees truly drive adoption, or will it mainly attract arbitrage and speculative flows? Not so sure that the lower fees are going to drive adoption, because, man, if you want lower fees, you could just go to an L2. And also, there's other L1s that are easier to get to than ours. So I don't think the low fees is what's going to drive the adoption. What's going to drive people to it is FOMO when they see green candles. In a perfect world, though, yeah, people would go to the chain that had the lowest fees. Let's see. Is there another question in here? Will Pulse ever be on Coinbase.com? Well, never say never. In fact, I should type that in here for him. Never say never. I mean, it doesn't look like it's going to, if you were going to say so, if you want to make a yes or no question out of it, does it look like it's ever going to happen? Yes or no, and you force me, gun to my head, to answer that question as of today, well, then, yeah, I would say no, it's probably not. But anything can happen. This is crypto. How does Hex's time-locked staking model create long-term incentives compared to traditional yield products in DeFi? So this was like, when I first got to speak, this was one of the first things I talked about here, is that, one, Hex is the only yield-bearing asset that is not someone else's liability. If you guys don't have that phrase memorized yet, say write it down now and commit that phrase to memory, because that phrase is the best elevator pitch for Hex. Hex is the only yield-bearing asset that is not somebody else's liability. Every other yield-bearing asset out there, or every other interest-bearing asset out there, anything that pays interest or a yield or a dividend or whatever, is a liability of someone else. Deposit your money into a bank CD, it's a liability of the bank. You buy a bond, that is a liability of the company or a liability of the government. Hex is nobody's liability. No one is liable for paying the yield on Hex. It just happens automatically. So, what is it about Hex's staking model that creates long-term incentives? We all know bigger pays better and longer pays better. And that's built into the code of Hex. You will get more you'll get more T shares for the more that you stake and the longer that you stake. In fact, I'm kind of thinking about starting up another stake myself here just because I believe sincerely that it's going to be a long time before the bull run really gets going. A lot of people are not staking because they think, well, bull run's got to happen pretty soon because they still fall for the 4-year cycle fallacy. But from what I have seen out of everything in all the charts, what I think is, this bull run might not get started for a long time. The earliest is going to be June 2026. By the way, if any one of you in the audience out there, I mean, I know this is a very unpopular opinion I have, but if anybody in the audience out there thinks they can prove me wrong on that, I want to bring you on the stream. I want to bring you on here because I would love to be wrong. So if you think you can prove me wrong, hit me up on X. Just my handle is reinvent ideal on X. I will gladly bring you on right here and listen to why you think I'm wrong. Be more than happy to hear you out. Because I want to be wrong on that. But just looking at everything I'm seeing here, I think it's going to take a long time before we get the real bull run. And by real bull run, I mean you're doing 2, 3, 5Xs a day. All right. So that was everything that I had the time here for today. I see nobody resubmitted their questions in the chat there. So yeah, I'm sorry, guys. I lost your questions from earlier. And let me know, there might be a way for me to get them, though. Hang on. Might be another way for me to get them. Sorry about this, guys. Let me just pull up a stream on YouTube and see if I can check them out there. I imagine I probably could. So, let's see. I'll do this here. I got to shut off the audio. Sorry about this, guys. All right. Yeah, I can. Okay, great. Interesting. Didn't know I could do that. Okay. So, yeah, we saw some questions here. Top of the Roost asked, if we were already in a recession and now coming out, does that mean we won't get QE? No, not necessarily. They still got to do QE for other reasons. I mean, that money printer has to get turned on because the amount of debt that is being reissued and the amount of new debt being issued is too much for the world to absorb without crowding out other investments, other assets in the debt market. Like figuratively, there are enough buyers of government debt out there to buy it all up. But the problem is there's enough money out there to buy it all up. The problem is it's going to take money out from other investments like corporate bonds and municipal bonds and really drain them dry, and those markets will fail. And they're not going to allow those markets to fail. I mean, if they did, like if a municipality fails, you know what they do? They turn on the money printer to buy up those bonds. So don't think that coming out of a recession means no QE or no money printer. And also, it doesn't necessarily have to be the Federal Reserve doing QE and doing their money printer to get more money printed. You always got to remember here is that it's the global M2 growth that causes crypto to go up. Right now, all of the global M2 growth that we have experienced so far this year has come from China doing their QE. It's just China doing QE right now. But when the United States, when the Bank of Japan, when the Eurozone starts doing their own versions of QE, that will change everything and push it up further. All right. And also, we don't necessarily need to go into a recession to have quantitative easing. I mean, I think just what Trump and Bessent want to do just for their economic vision to come true the way they like it, they're going to want QE. All right. Another question here. Do you think, this is from Fugly Googly, do you think we're near the top this cycle? Most influencers say Bitcoin top will be around 130 to 140,000 and Ethereum would be 6 to 7. Would you agree? I think that if that's the case, if that's the tops this cycle, then that's a serious threat to the future of crypto. Like, when we look at just Ethereum and how many X's it did last cycle, if it doesn't even do a 2X this cycle, then a lot of people are never going to look at Ethereum again. And with Bitcoin, while it's done 6X from the bottom, it has not even done a 2X from its previous cycle. And if it can't do that, people are going to be looking at these assets and be like, man, these assets ain't doing, they didn't done what they're supposed to be doing. They're supposed to be creating life-changing wealth. Because, yeah, remember, the majority of all the money in crypto is in the top, it's in the top two coins. It's in Ethereum and Bitcoin. That makes up about 70% of the market there. So if 70% of the market can't give you life-changing wealth, that is a serious threat to crypto. So no, I don't think that we're near those top prices. I don't think we're anywhere near them. Especially when the money printer gets turned back on, that's going to really kick these guys off and get them going a lot harder, get them going a lot further. See, Johnny asked, did you observe your honorable mention today? Did I? Don't know. Did I? Maybe I did. Fugly Googly asks, Cairo, do you still believe your target of $7 EHEX will be hit this cycle, or have you revised it down? And if yes, by how much? I'm still holding to that if Ethereum does 20,000. Because that's what it's predicated on. If Ethereum does 20,000, I cannot envision a world where EHEX does less than $7. So it really does all depend on Ethereum. And if you guys want somebody to blame for like why this cycle is sucking, you can blame the Ethereum Foundation for dumping the price down every time it got a little bit of a pump. And also for having that stupid fool that they put out there, that was a real stupid person that did the worst PR for Ethereum, that came out and said, oh, we're not concerned about Ethereum having a good price. You see, we're all about innovation. Basically, they said, oh, we're in it for the tech. No, only one person in all of crypto that's here for the tech, and that's Fast Abdul. But yeah, this one woman that was the spokesperson for the Ethereum Foundation had said, yeah, we're not interested in making the price go up or anything. And that's one of the worst things you could possibly say if you're someone with any sort of authority over crypto. It's one of the worst things you could possibly say. Now, had they even said the opposite, though, I don't think that was going to help Ethereum that much because, again, all of the macro has been working against crypto this whole time. It is about to turn around because the lag typically only lasts 90 days. Only lasts about 90 days when M2 goes up, but crypto goes down. That doesn't go on for more than 3 months historically. And really, when we look at M2 and how it's gone up, it's not gone up by much. It's only gone up about 8%, and all of that's come from China. When the real M2 growth starts, meaning the money printers getting turned on and used, that is when you're going to see crypto explode. That's when the real bull run begins, all right? And I tell you what, when that real bull run begins, you're going to see me doing a victory dance like this. So here's my promise to you. If we get back to sacrifice prices. I'll do one of my old stripper routines for you live on this stream. That's all I got to say for the day here. Cairo out. That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at ReinventIdeal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com. because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses. Grab it before the suits catch on. And remember, the bears get blocked right here and told to shut the FUD up. Until next time, this is Cairo Copeland, your millennial Moses,